But tonight we got our very own Mike. Come on, Harrison.
Mike Harrison.
Mike Harrison. Got a great story tonight, so I think it'll resonate with some of you guys.
Hello.
All right, tell us about, you've been a member.
Tell us about how you found Lifestyles, what you did before Lifestyles.
Well, this is preferred member since 2013. That's definitely not the case. I joined
Yes, you were basic back then.
2013 at the most basic level. Just kind of looking at it, knew I needed to do something different and start at the basic level. My wife kind of looked at me like I was from Mars, like, what are you thinking? I was actually making a sales call. There's a company down on the first floor. It's not there anymore. But I'd been listening on the radio to the show.
You were a roofer back then, right?
Yeah, and so I'd been listening on the radio, to the radio for a couple years. I'd purchased a rent property in a self-directed IRA. Those of you that think that's a good idea, come see me after the show.
We did not teach you to do that. Get rich quick crap.
That is absolutely the worst. Well, maybe not the worst. I mean, just buying real estate's good. But I did that because I needed, I had a great job, made great money, and kind of reverse engineered and realized that I wasn't going to have the retirement that I wanted. So I started buying real estate, and then realized, hey, I kind of stumbled into a 9% return all by myself without knowing what I was doing, and I knew I was doing it poorly. So was making a sales call, listened to Lifestyles Unlimited, and then I'm walking up the stairs, and I look up, and like, there's the office, and it's kind of devil on one shoulder, angel on the other, and you get that voice in your head. It would have been easier just to walk out and walk away, and I just told myself, you know what, it's now or never, and as fate would have it, they were having case study that night. Al Walker was teaching it, so I stuck around for case study, signed up, didn't even tell my wife I signed up, and it wasn't $297, it was a lot more than that.
Yep. I paid $500 when I joined 10 years ago.
Yeah, it was like $5 or $540, something like that. So I signed up at the basic level.
1 year.
1 year. Came home. Hey, I joined this real estate group, and that didn't go over very good. But by the time I got 4 houses, and I was averaging over $500 a house in my first 4. She's kind of like, hey, what's going on here? And so she took interest. Then we went to the challenge level, and so I rode that. And then about 2017, 2018, I said, you know what, we got to take it up a notch and get serious about it. So I was never really serious until literally January 1st, 2018. And
you're a little bit of a procrastinator, seeing if it was real.
Yeah.
You kept making all this money, let's go a little bit further.
I was making good money, and the saying, what gets in the way of a great life, a good life, and that was legitimate, that was real, that was us. And so 2018, we said, you know what, we got to ramp it up. And so I went preferred, and we started sacrificing houses and jumping into the preferred level. Yeah.
Because you knew the 401k wasn't going to.
I'd learned that, before. And look, I was the Dave Ramsey, we fed the, you know what, out of the 401, that thing ate before we did. Yeah. So, and it's still, you just do the reverse engineer. Whatever you have in your 401k, take 4% of that. And that's what you're supposed to live on for the rest of your life.
You're supposed to draw down 4%, yep.
Yeah, so you don't die before you outlive your money. So if it's $1 million, you get $40,000 a year pre-tax. Who thinks that's going to be a good retirement?
Yeah, if you make
I'm not saying you can't do it.
But if you're making $200,000 a year, now you're making $40,000 a year, that's a different lifestyle. You went from Roost Chris to ramen.
If that.
Yeah.
And so then you're at that age where you're like wanting to do everything you've been putting off.
Yep.
Yeah, the vacations, we're going to talk about that in a little bit.
Yeah.
But just to look at we picked one of his properties to look at. And so tell us a little bit about this. You can see the before and after.
Dougal. Yeah, this was house number 8, I think. 8 or 9, somewhere in there.
That's nice. How many houses
does it look better? Doesn't the after look better?
I mean, by this time.
That one has Cheerios in that toilet.
Yeah, this house, I knew as soon as I pulled up to this house was going to rock it. I wanted it bad. I mean, really bad. And there was 20 offers on it. And the realtor that sold me this was not a Lifestyles Unlimited realtor. This was just a regular realtor, friend of mine, and she was new. She had gotten laid off during 2008, 2010, and then became a realtor. And so I was telling everyone at this time, hey, I'm buying houses, I'm buying houses, I'm buying houses. And Lori found this house.
Okay.
And she's like, hey, why don't you come look at this house? I'm like, yeah. I'm like standing in the driveway going, oh my gosh, I got to have this house. And so she told me the asking price, and I'm like, okay, this is what I want to do, Lori, after looking at the house. And it needed some work, obviously. It needed flooring because it was in the neighborhood's really nice, so we were going to redo the countertops.
Did update it, yep.
Yeah, we were going to have to put some money in this house. I knew that immediately because of my experience with the other houses. And so I said, Lori, here's what we're going to do. We're going to do $5,000 earnest money and tell them we'll close in 10 days. And by the way, give them $1,000 more than they're asking for the house. And she's like, no, that's silly. You just need to do $100 or something. I'm like, Lori, I need to get their attention. I want this house. So
remember this, because if you
got the
come to my
house.
seminar, I always say full price or more. When there's 20 offers, you're not going to get it. You understand?
Yeah.
It's going to be the best offer.
Yeah, and this was 2015. This was before the feeding frenzy of 2021.
Yep.
So a lot of people wanted this property, but I got it.
Well, let's see how it worked out for you. So by overpaying for it,
Yeah.
what are your returns?
Talk about the value and talk about the value and everything.
Yeah, the return was awesome. I mean, this is one of those houses that stayed rented, and people rented this property for a long period of time. And when there was a move out, it was literally get in, clean it up. 10 days later, we had somebody else. And it was a nice property. We screened the heck out of this property. We put good people in this property each and every time. So it was just one of those. It was kind of plug and play. I mean,
So if you remember my speech, I
said.
said houses will make between $200 to $600, right? So you see this house makes $500 a month, right? Is that going to retire him? But he has 8 other ones. You see that? See how it's starting to add up? But here's the big thing, guys. Now, normally I say it's about $30,000 up here in Dallas out of pocket. This one was a little bit more. It was $42,000, right? But look how much equity he captured. $122,000. That's a 300% return. Who'd be okay with that? Now, there's a technical term in the industry for that. You know what it is?
Yeah, peeing your pants, excited.
Who agrees?
Yeah.
You make a 300% return. That's life-changing.
Hey, Dave, it's better. In 2019.
I don't want to hear about the pens and what goes in those. Okay.
In 2019, and I think Carrie with Capital Concepts is here.
Okay.
I did a 5-property refinance into a commercial loan so I could pull money out because what was I doing? I was going to go passive, and I needed money to go passive and was tied up in houses. So I took 5 houses that were cash flowing, and I did a refinance and pulled out just under $100,000 and put that into a property that I still own today as a passive. So this property gave me, on top of the 122, anywhere from $20,000 to $25,000, however you want to.
Now I want you to think about that. If you pull money out of your house through a loan, how much taxes do you pay? Nothing. It's a loan. You can do whatever you want with that money. So.
Yeah. So we got the 122 plus, if you want to call it 20.
Yep.
We were able to pull about 140, and then here's the beauty. I've got so many, passive gains are offset by passive losses. So when we sold this in December of 2021, I had enough passive K1s to where I actually got.
Now what he just spoke to when you're new is Greek.
Yeah.
I will break down in a simple language, even the Aggies can understand it, how we pay no tax in real estate. Who wants to never pay taxes again? Not everybody? Raise your hands. Yeah, I'm going to show you how to do this legally where you don't have to pay any taxes, and that's what he's talking about. So if real estate's done correctly, what he's saying is by selling these other ones, when you think you owe taxes, you owe no taxes. It's kind of cool.
We didn't pay tax on the 120.
I made $2 million the other year. Guess how much taxes I got back? I got back money. I got back $28,000. God bless the IRS. This would be. Yeah. I have to make it $2 million, so that's the point.
So we were talking about the vacations. Our family has always looked forward to adrenaline-laced activity-type vacations. Lots of adventure and, yes, some relaxed days in between. In the past, these vacations were very every other year and on a budget. Let's say that has changed. So talk a little bit about that.
It has. Well, your kids aren't getting any younger, and that was part of my corporate days, and I'm not with that anymore. Thank you, Passive Income. Thank you, Dale Walmsley. Thank you, Lifestyles Unlimited. So like, how can we get these kids' attention and spend time with them while we can? And it was a scrimp and save, and hey, you know, we want to do this. I mean, we still enjoyed our time together, but now, I mean, we used to drive to go skiing. We're flying into Crested Butte for spring break. We did a ski in, ski out. We'll be there if anyone's in Crested Butte for spring break.
I don't even know what that means, but it sounds cool.
We just booked Cayman a few months back. We'll be there in July for our summer trip, and I'm taking all the kids.
So it's not one every 2 years.
Yeah.
It's like 3 vacations a year.
We do 2 a year.
Okay.
So, yeah, we have a good time. You know, that's what it's all about.
And before I go to this last slide, which is I think was mind-blowing, but, you know, I have to admit I agree with that because, you know, that was the biggest thing when I joined Lifestyles back in 2017. 2018, my oldest, I have an 8-year-old and a soon-to-be 6-year-old, we took the oldest, he was turning 5, we went to Legoland. Normally, we wouldn't have been able to stay in the Legoland Hotel.
Oh.
We were able to stay in the Legoland Hotel, then walk across the street, and go to, you know, the Legoland theme park. So you're right. It's like
you weren't like the Mego Man fake name outside the hotel.
Yeah, down the street, you have to walk a mile, and so it's very exciting being able to take a vacation and not have to be. I mean, you know, you're still on a budget, but I'm saying not be conscious about.
So when they eat the $14 hot dog, it's okay that they eat half.
Like when your son threw it, like I don't want to eat this. I would have been like, you know, hey, this is we're okay because you know Dave
I'd
and
still
Dale.
put it in a doggy bag.
Yeah, we're gonna save it for later.
I do have a picture of my daughter at Disney World when she was 9. You bought like the $17 chicken sandwich, and she's crying and she won't eat it. And I took a picture of it. I still have it. I should maybe send that up here. But that same daughter's 22.
You still have the sandwich?
No, but the picture.
Oh, the
but,
picture.
Yeah.
You should have gave me the picture.
I was like, save the sandwich. No, we still got a half a day.
We
But
could have put that in the slide.
that really happens. Yeah.
So this is the part that I thought that was super exciting because a lot of you guys, you think you're in the room, you're sitting down, you think you can't, you know, this can't be you, but I'm telling you, you're watching up here subconsciously, your mind is working. If you'll allow it to, you can actually, you know, start forming your financial destiny also. So tell us a little about short term because I love this long term. But tell us a little bit about the short and long term goals.
Yeah, so I call it my third phase. Did the houses at the most basic level, built that up, then was able to transfer the houses into the passive deals. Mm-hmm. And then now it's time to take that next step. I've got my IROP certification. I got the lead, and I mean there's some headwinds out there. I mean we got inflation and we got high taxes and we got high insurance, but it's the next move to make. I mean it's the right move to make for us. And just kind of continue this wonderful journey. It's a lot of fun. Celebrate the wins. My wife's involved. Normally she would be here this evening. She couldn't make it. But yeah, this is what's next for us and continue that passive side. So,
cool. So, but what's exciting, what he didn't mention, I love how we were able to pull out double current passive portfolio currently worth $1.4 million. That is, come on guys, is that not exciting?
There's still that's just the passive. That doesn't include the houses I still have.
Listen, we can't give it
now
all
you
to
just
them
showed
in one
up.
night.
Yeah.
The point is you became a millionaire.
Yeah, I did.
Cool. Yeah.
Thanks, Dale Walmsley.
You added another comma. Who wants to add another comma to their family?
Exactly.
You know? That's
exactly.
huge.
So this is pretty exciting. You know, this is an exciting story, and you see what I want you guys to pull out of this, and I'll sit down. What I want you to pull out of this is we're just regular people. You know, regular people that decided to change our lives. And you're sitting there, I'm telling you, I was in your shoes. I was a teacher of the year and quit, right?
Yeah. He was teacher of the year, then he quit.
Listen,
I love that.
You know, I'll tell you a little bit more about my story, but I'm a teacher. I'm coming in. I'm making about $4,500. My salary is going down $1,400 because I'm having to add my wife and children on my insurance. My wife is leaving a 6-figure job. I'm having my second child. We're Dave Ramsey. I'm putting 2 houses back on a mortgage. You know what I'm saying? I'm going through a lot. I'm sitting in your chair like, how is this going to work? And, you know, and so 4 years, went up, like I say, bought those 7 houses in 4 years, tripled our income, you know, $350 to $1.4 million in about 4 years. So I'm telling you, this stuff works. I believe it. I didn't come work for the company just to do something. I really believe in what Dale and Dave, you know, and the rest of the team are doing. And so that's why I'm up here. So I appreciate you, Mike.
Yeah, I want to say one more thing. No one started slower than I did. I joined in March of 2013, did the 2-day. Dale Walmsley actually taught it in April 18th or 19th, but who's remembering the days? But of 2013. I didn't buy my first house until October of 2013. So 6 months later, and even then, I tried to back out of the deal, and they're like, no, you're crazy. You got to buy this house. So I bought it, and I mean, it was beat up. I mean, you're walking through, it was not a good scene, but no one starts slower than me, so when you decide to do this, just go. It works, and consult your mentors, and just double check your homework, and you'll be fine.
All right. You want to give any shout outs quick? And then we'll take some questions. Adrian's just ready to run off stage. You got to get questions.
Yeah, these are the vendors that I use, finishing touches for the GC, KBS, Kim Sporich, and then Capital Concepts is who I did the refinance with this particular property. When I did that 5-house commercial loan with Capital. So
Sam in the building.
Sam sold me like 5 houses. One time he sold 4 for me in one transaction. That was fantastic to a Lifestyles member.
There you go.
It was easy.
Another, yeah.
Yeah, and then Lee, she sold me a great house as well.
Awesome.
And Lynn and Rick.
Lynn Murrow was my first mentor.
She used to be a single mentor up here.
Yeah. So when I first came to Dallas, she was my mentor, and then Rick became my mentor.
Rick Johnson, yeah, good guy.
And then Charles Ho has helped me a lot as well.
Yeah, I saw Charles earlier. I don't know if he's still here.
There
he is.
Back.
Love the hose. There you go. All right.
Yeah.
So, do you want to take some questions?
Yeah.
Anybody got questions? You got one over there. The question is,
No.
did it take you very long to get another house? I'll just repeat it.
Once I got that first one done, and as beat up as that house was, I mean, it was, I can tell you about it later. It was bad. I got that house. It took all of 90 days to get stabilized, got through Christmas, and by February, we were on to our next deal. Yeah. Just go.
Anybody else?
Thanks, Leo. John.
No, there's one back there. Let's get that one. Yeah, you.
Yes, you mentioned you used the K1 from Passive for the single family.
Yes.
Did you claim as a real estate professional?
No. So to enable me to write off the passive, essentially the passive losses can write off passive gains. But if I was a real estate professional, then it's no longer passive. So I couldn't do that.
That's an accounting question.
Yeah, and I'm no tax guy, so I leave it. I use a vendor here to do my taxes.
Yep.
Can you elaborate on your experience with the self-directed IRA?
How much time do we have? No.
So let me keep it simple. If you want to use a self-directed IRA, the way we teach it here at Lifestyles, the only way you can use it is what's called a passive investor. You do not put real estate in an IRA. There's UBIT taxes, all that. I could spend 4 hours on a dissertation on that.
You don't get to keep the cash flow.
Yeah.
It goes to the
back
IRA.
to the IRA. And then when you pull it out, it's taxable. Outside the IRA, it's all tax-free because we write something called depreciation against it. But I spent an hour teaching that in the seminar. Come back to the seminar.
A lot of
I'll answer it
fees.
there.
There's a show on the radio that'll talk about it
Yep.
on the podcast.
There you go. Cool.
Did
All right.
you use
One last
third-party
one.
management, or did you manage it yourself?
So the question was, did you use property management? I don't know why I repeat a question. Just use the microphone. I'm used to online stuff.
Good question. So we started managing ourselves and then transitioned over to third party.
Yep.
And that just worked
Notice
out
they all
really
get
well.
lazier over time. They all want to pinch pennies at the beginning. There's nothing wrong with that.
It wasn't
Make-
bad at the
make
beginning.
sure
I had the bright idea that I was working, corporate guy, and my wonderful mother of my children, hey, babe, you manage the properties. And that went over like a lead pillow, man. That
Okay,
wasn't good.
cool.
So
That's what I had to do.
so I was managing and working, and
I was like property management because the wife, I was let her deal with the kids, and I was just, sometimes.
Yeah.
I did.
Yeah.
Well,
Managing the wife is the
it's-
first job.
It wasn't that bad. I mean, the financial side of it was literally the third Saturday of every month, Saturday morning, about an hour and a half, just getting my books in shape.
Who'd be okay spending a couple hours a month to make all that extra money? Yeah. All right, well, let's give these guys a hand. Thanks, guys.